All right, everyone, happy weekend to you. It is now November 1st, and I think we have a very exciting November to look forward to, certainly with the U.S. presidential election on Tuesday, the recent sell-off in stocks leading up into that election. I'll talk about that. I'll talk about where I see things going, take you through the major indices, ETFs I follow, and also give you a fresh look at some of the big names and some things that I think could be happening maybe behind the scenes, possibly on a rotation basis. So here we are looking at roughly the last 2 months of the SPX since we had the all-time high that was set on September 2nd, and what I have tracing out as an intermediate 2 wave that is in at 3209 on September 24th, and then a very, very deep minor 2 retest that's gone all the way past even an 88% fib retracement down to about 32.33. Now, obviously, for this count to hold going forward, 3209 cannot be broken. So you're going to notice that there is an intermediate, much more bearish count on the table here. If that is to play out, I still think we're going to see a bounce. So let me talk about a technical thing that we need to be paying attention to. So if you notice this big red bar, this would have been on Wednesday, that closed at about 3271, set an RSI 9 level at 26.53. Friday's close was lower, just below 3270, but at an RSI that was more than 4 points higher. Okay, so that is what we call here a classic regular divergence. It is indicating that the selling momentum has slowed. On this fresh closing low, the selling momentum is not as great as it was even in the middle of the week. Okay, so that usually is good for at least a short-term bounce, but because this is on a daily chart, there can be a time frame expectation that this could actually be the low that is set, that 3209 will not break. Now, I made a rather bold Twitter call during the middle of this past week, during the last week of October, that I said, I think there's a chance that we don't ever see 3300 again. So obviously, we've got to see that resolve during this first week of November here to the upside. Now, if 3209 is broken, if we do get a bearish market response leading into the election and then even after the election, this target down here at 3055, that's only a 38% retrace of the entire move up from March, and that might not even be low enough. But we're going to leave it there as the first downside target. Now, for the upside target is, I should have updated and shown you this, the upside target for the minor 3, that would be the bullish continuation, would be way, 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 way up here. And I haven't actually updated that calculation. It would not be quite as high as 3917, but it would definitely be strongly in the mid 3800s. And that would be my call for the bullish resolution to get the S&P up probably into the 3800s by the end of 2020. Okay, now in QQQ, the same classic regular divergence is in place on the RSI, but I also want to point out there's another divergence here in place, and that's called a hidden divergence. So you're going to notice the September 21st low had an RSI level of 37.35. On Friday, October 30th's close, a higher price at about 269, but an RSI level 4 points lower. That is called a hidden divergence. So price is not confirming the momentum move down. And so I put these two pieces of divergence together along with what looks to me to be a valid, complete ABC minor 2. I do think these lows are in. And I would give a wave 1 up target at about 290. We have very, very significant rail resistance right here that is probably going to cap an initial rally next week, and then with some fallback, this is where I would look to buy aggressively. So probably not looking to buy aggressively the first move up. I want to be the second mouse getting the cheese, so to speak, to catch that third wave up is the one that I really want to get on. Okay, because I'm looking here at QQQ, let me go ahead and take you now through some of the big tech names. So is the same kind of divergence in place in Apple? And the answer is yes. So in Apple, we do see that same, although it's a little less strong, that same classic divergence in place. I think if you can get Apple to break out of this down channel, it's not going to take much. At least in the span of roughly $35 of selling here, maybe 113. If it can get up and out of that down channel, I think we could see Apple initially at about 120, and then here again, that pullback is the one that I would look to buy. Now, obviously, if we see a very convicting breakdown early next week below 106, then below 103, yeah, Apple's going to tumble sub 100, but I do think that is a lower probability. Okay, Amazon. Now, I made some big mistakes in Amazon really since this high. My trading account and investing account through the first 10 days of October were outstanding. And then I started chasing those down. And it's just a terrible idea. It was really like trying to catch a falling knife here. And Amazon has just been relentless in selling. So more than 10% down off of the October 12th high all the way down to almost 3,000. Okay, so the divergence that I just cited in SPX, QQQ, and Apple is not in Amazon. You're going to see continued selling and continued RSI values that are lower. Although this RSI value is higher than the one over here, you're going to notice that price is higher. That is not a divergence. That is what you would say would be typical. So I'm calling for lows in SPX and QQQ, but not seeing the divergence in place in Amazon. It doesn't have to be there for a big bounce, because you're also going to notice this declining neckline off what is potentially an inverse head and shoulders. It got hit and it held a support on Friday. So we could see that Amazon will try to recapture some of these resistance levels, 3090, 3200, and then a big one right in here, the 3224 up here to about 3250. That's a big resistance level, the site of some previous support here, but selling here, certainly a continuation of selling here. And then when this big red bar blew through it on the back test, this was really the one that got rejected. So Amazon's got a lot of work to do. Okay, Google. So of the four big tech giants that reported really good earnings on Thursday of last week, Google was the only one with the big positive response. And if the bullish resolution is to take place here, I actually think that Google probably already put in a wave 1 and a wave 2. So let me show you that now on the short-term chart. If I get you to Google here, this rocket shot off of earnings hit this top rail very nearly, all the way back to find support at the middle rail and really close to this 200 period average. So I actually think a wave 1 and 2 could already be in Google. And it's possible that we're going to be ready if we get the bullish resolution for very, very aggressive upside targets in Google. And based on the really strong move out of here, it is certainly possible. Okay, a couple other big names. Facebook with a huge run-up on leading into its earnings report, and then a very, very disappointing response. So I do have a minor too low here in Facebook, a similar account to SPX, QQQ, Apple, and Amazon. Facebook's got to prove it. We've got to prove that these names can actually follow through, and we'll see. Now, Microsoft, interesting. One that did not sell off nearly as much on Friday, but of course, it also really didn't have any type of gains on Thursday to really retrace, and a very, very deep, nearly an 88% retracement on Microsoft. So it is actually close to this invalidation level. It's going to be extremely significant horizontal support, and if there's actually here a bearish resolution, the downside targets are quite painful. It really in all of these big tech names we're going to see. Okay, so Tesla is one. I had to revise my count, and I'm showing you this here. I don't think I've tweeted this out yet as an updated count. You'll want to catch it here, going all the way back to February, where I think Tesla made an intermediate one high within a cycle 3. So I do have Tesla still within a secular bull cycle. There are many people that do not, but I do. I don't think the final top is in, even if we've made a significant intermediate top here. That would be a primary top. I don't think it's going to result in Tesla staying low for a long, long, long time. It would be painful to see an ABC down into targets that are sub 300, but even then, I would still have a primary 3 up into targets that are very, very high, way higher than $500. Okay, so my primary count is a triangle. So A, B, C, D, E, that triangle, if it's valid, it does need to be done. We can get that triangle to go down towards 351, but really we want to see that upsloping trend line hold in order for this flat top triangle to play out. Okay, so if there is continued selling in Tesla, I actually think we're at a minor 2 count. Okay, so I want to show you that. And so what that means is it would actually be only short-term bearish, but in the intermediate to long-term, much, much more bullish. Okay, so if we see selling down to say 360 or even lower, if it tries to reach a 330 area here, then it's just kind of tracing out what would be called here a running flat. Okay, so running flats are very, very bullish. If it does get down below Thursday and Friday's lows, but it reverses, I would probably give that minor 2, that Super Bowl count, a little bit more weight. Okay, but really it's kind of the 350 area that would cause me to have to get out of the triangle account. Okay, now with that said, if we get a bullish resolution, we got to be really careful, because look, there will absolutely be divergence on the MACD and the RSI if we get a new high above 502. So even if we get the bullish resolution, unless it just blasts off, I'm actually intermediate term a little bit more bearish on Tesla. Okay, let me take you through here IWM, small caps and financials. So less selling in small caps, industrials, and financials at the end of the week. And I actually view that as very bullish. Okay, so let me just briefly talk about something that I think could be happening. It's possible that we're seeing a rotating move out of tech and into broader sectors of the general market. So there is a possibility that we don't see continued massive relative strength and leadership out of tech. Now, why might that be? Okay, so just briefly something political. I don't like to use my Twitter feed, don't really like to talk about politics there and on the video, but I do want to think about a possibility that could the selling in tech have been front running, foreshadowing something with the election. It is clear on record that Republicans have been much more outspoken about antitrust issues related to big tech. So if there is a Republican sweep, now this would be not probable as of polling and sentiment at the moment, but if that happens, there could be some action taken against some of these big tech names, which means if there still is going to be bullish market resolution, that money is going to go into things like IWM, XLF, DIA, which is the Dow ETF, and into individual names, small mid-cap names, banks, and industrials. So just a possibility. I'm not saying it's going to happen. I'm not even saying it's likely. I just want to just throw that out there in case something like that does happen. Okay, so I have IWM just like I do XLF, just like I actually would the Dow, in a intermediate 1, too low as in, minor 1, minor 2, with much less of a percent correction than SPX and QQQ, which I look at as relative strength. So if we do get a market resolution that's bullish, I'm going to be looking to put more money into small, mid caps, financials, and industrials. Let's take a look here at XLF. And I'm going to zoom you all the way back into March, and you're going to notice that we haven't yet had a breakout. Unlike the rest of the broad market, excluding energy, oil has just been trounced, but we're still waiting for financials to break out. So this 2294 level has to hold for the 1-2 nested count to play out. And you're going to notice on a couple big names, if I just show you JP Morgan, you're going to see JP's chart is really exactly the same look as XLF. Now, don't be surprised. That's because the highest individual weighted name in the XLF Financials ETF is JP Morgan. I would not recommend you buy this name. Instead, I would recommend that you buy this name. This is Morgan Stanley. So Morgan Stanley is tracing out higher highs, higher lows. And I think it may have just put in potentially a failed flat, which is very bullish. So if there's an individual banking name in the big banking sector, this is the one that I think has the strongest chart. It's got support at its 200-day moving average. This moving average cluster is not that far away. I could show you Goldman, but I don't think Goldman's chart looks quite as bullish. In fact, Goldman looks a lot like XLF as well. So very, very complex correction here on Goldman. It's a double zigzag with a triangle correction as part of it. Very complicated to even try to discuss from an Elliott Wave perspective. Don't worry about it. With Goldman substantially beneath all its MAs, beneath this downtrend line, not an individual name. This right here is the individual banking name if you want an individual play. Okay, now let me take you through, before I get into metals and miners, I'll use that to finish. Let me get you into some other names you're going to be interested in. So what about Zoom? Okay, so I have been consistently bearish since this high on Zoom due to this massive 2-month-long negative divergence on both RSI and MACD. I am still bearish on Zoom. Now there is an alternate bull count, but it is low probability because this sell-off here, although currently 3 waves down, which is currently corrective, is so deep in comparison to this high. So I view this as a low probability count, and I actually think the power earnings gap right here at the end of August, massive, plus 41% day. I think that selling could target a gap fill. So we're going to see what happens. Now, just briefly again, let me get a little bit more big picture minded. So Zoom's explosion is due to a COVID response. So what happens if we actually see a movement away from the continued fear-based responses to COVID? Now, that's currently not what's happening in Europe. So it's possible that because of what's happening in Europe, Zoom does actually have a chance to finish out this bullish leg. But the U.S. is much more open. And if the election does go towards the candidate that is claiming he's going to keep the economy open more, is there a bullish resolution for Zoom? And my intuition and my Elliott Wave counting says no. So I am still holding some Zoom puts. They, along with Google, were very profitable for me this week, unfortunately, with the rest of the market being down so much. I definitely did not have a profitable week. The last 3 weeks have been pretty horrible for me overall. But we're going to see what happens in some of these individual names. Now, I want to take you through kind of going really, I think, kind of from worst up towards better. Beyond also needed a major chart update from me. So Beyond just a waterfall sell-off, and I don't know why. Beyond has been volatile, but it was surprising to me. So surprising that I really had to significantly change this, that I now think that Beyond, just like all those other big tech names, is in a minor 1, minor 2. This retrace is extremely deep, much deeper than I anticipated, in between a 78 and a 62% retrace. So I did just put this in. I had to put in a very, very bearish alternate count here on Beyond, because I'm going to be honest, I don't know if support is actually going to hold on Beyond. If it does, we've got amazing upside targets, and I actually reduced my position by half this week. So we're going to see, but we're basically at horizontal support and this lower rail that if it breaks and 120 breaks, I think we're going to see fresh lows. Okay, so waiting for resolution. Okay, so Boeing. If my rotating thesis and my COVID thesis is going to play out, then you have to be bullish on names like Boeing. I want to actually show you Boeing's all-time chart. I think this is kind of a thing of beauty here. Log scale from 1967, I believe it is, all the way through today. I believe Boeing has just finished a grand super cycle wave, a wave low in March. And you can just barely see it, but look right here, you're going to see this bull flag on the monthly. I think this is bullish. Okay, now Boeing absolutely has not had any attempt to put in higher highs. It's only put in higher lows. I really would like this daily to show up here. Let's see if we can get that daily to pop up. Okay, because that's more zoomed in on the flag. If this isn't going to pop up here, let me just briefly go back. So this retrace here, the only way that I could think about even considering a 78% drop in the price of Boeing is that it was a grand super cycle low. Okay, so that means the projections for Boeing going forward, if you believe the world economy is going to continue to recover, the U.S. GDP in Q3 was up 33% quarter over quarter. It's recovering. If we continue to see worldwide economic recovery, don't you think the airline industry, the aviation industry is going to recover? I do, and I opened up a starter position in Boeing, and I will be looking to add. There we go. There's this massive 4-month-long bull flag. Okay, so we got to get some resolution up here. It's got to recapture these moving averages. If I see some moving average recapture here in the mid 150s, I think we can be a little bit more aggressive here on Boeing. Okay, so let me take you into Walmart now. So here into consumer discretionary, big Dow component. Now there was some overthrow out of what I was hoping was a bull flag here. So I certainly hope that selling has stopped, but you can see very, very bullish upside targets and a very clear uptrend intact. So a progression of higher highs, higher lows. That's what you want for strong names in bull markets. Here's one that I'm very confident I'm going to be getting involved with, and this is Honeywell. So it's been kind of going back and forth through this sideways consolidation, a breakout that was false, a breakdown that was false, a breakout, another breakdown. And if it can get solidly through this level, I have very, very bullish upside targets on Honeywell, which again, if we see a rotating industrial play, I want to be ready with names like Boeing, Walmart, Honeywell. Okay, more of a growth stock here to finish, ROKU. So ROKU again required a significant count adjustment, but a lot of times the beauty of sell-offs is they're highly clarifying for my Elliott Wave. Same is true of ROKU. So I certainly hope that this overthrowing red bar was just an overreacting response to all the selling. I think it could have found really nice minute degree 4 support, still well above its 50-day, and I do have still very, very optimistic targets for ROKU. I'm still holding a very, very strong position in ROKU. I think we could see, moving into its earnings, a very strong move up like we saw in the big tech names. But then I think if we get that bullish market thesis to play out, I think we see a positive earnings response from ROKU, not a negative one. Okay, and one that I want to also get more involved with is AMD. So AMD just put in what I think is a touch of significant lower rail support at a very, very deep degree 2 retracement. It could also be counted in an alternate way as a minor 4, okay, if we want to include a big ABC correction here. But I've got bullish upside targets for AMD. But it's got to break out of either what you can call it the handle of a cut plus handle pattern, or this declining bull flag here at 80, and then a staggered set, really 3 lids, 84, 86, and 89. So lots of resistance to make it through, but I am optimistic that by the end of the year, we could see AMD at $100. Okay, so now let me get you to finish here on metals and miners. And to show you GDX on the short term, a massive 2-month, what I think and hope, is a bull flag. All of these touches in here, 1, 2, 3, 4, 5, 6, 7, and then almost an 8th touch on this very active rail. If GDX can get above its 200 period moving average, which is above 38, and it can challenge these rails, there are very, very bullish upside targets. So I'm talking targets for GDX that would put it in the $60 to $70 range, and that might even be conservative. Okay, so GLD also looking for a downtrend resistance rail breakout and a 200 period 15-minute MA capture above 178. Okay, so let me show you those now on the daily chart. And you're going to see that massive bull flag with that layered resistance here on GDX, and then GLD. Here is what I think is a conservative upside target. I think it's maybe more realistic that we see GLD above 190. Okay, so this obviously has to correlate with my stock thesis, but that has been true since March. That gold, stocks, and really crypto have all gone up together. Although crypto this past week kind of bucked the trend and led up while the markets sold off. So very, very interesting. I'm not a crypto waver or follower, but that just as an observation, I think is a leading move for metals, just in my opinion. Okay, so let me also show you really just one name that is a silver miner that I like in a bullish count is First Majestic, AG, its ticker. So if we could see First Majestic get out of this down channel, needs to get up about $10.40, start working its way back up to this long-term resistance line. Now this line goes way back decades, where it was actually rejected on what I think is a minute 1 up. I've got very, very bullish upside targets on First Majestic. This one over here is Hecla on core mining. I think we could see a metals miners takeoff through the end of the year, and I think this could happen no matter who gets elected. Okay, so I hope you enjoyed that trip through. It's extremely exciting. What's going to happen Monday and Tuesday, I don't know. I did massively reduce risk over the weekend, only down to I'm only about at a 50% position in equities, and lots of cash at the ready to see what's going to happen. And stay tuned for updates as they come. And I'll be active on Twitter again during the week. So have a great rest of the weekend. Enjoy this what's going to be an exciting news-driven week, and we'll see what happens soon.